Are you immersed in a sea of business advice and education, but not sure what to embark on first? Instead of adding to the ocean of information, we're here to help you navigate it like a pro. The Wayfinding Growth podcast will help you take a deep dive into new actionable strategies, tools, and tactics to help you grow. So start charting a course for business growth as you explore a better way to grow further, faster, with your hosts, Remington Begg and George B. Thomas.
What's up, Wayfinders? Remington Begg from Impulse Creative here, and I've got my pal, George B. Thomas. How are you doing, George?
Dude, I am doing awesome. Hey, it's Friday. And
it is.
The weekend is ahead, and we've got an amazing guest. We're going to talk about something that is like foreign to me, so I'm super excited.
Yeah, so this week's episode is all about the why, the how, the who of leveraging accounting to support growth and better business decisions, aka knowing your numbers for your business. Our special guest for this week's journey is none other than Brad Ebenhoeh from Accountfully. How are you doing, Brad?
I'm doing great, Remington and George. I really appreciate the invite and look forward to trying to have a fun conversation about numbers and accounting on a Friday afternoon. So we'll see how it goes.
I'm curious, fun and accounting. I don't know before this interview if those were words that I would have collided together, but I'm hoping after this interview it is. Brad, I'm super excited because the first section we're going to go into is what's called navigational instruments. And just like those people who had to sail across the seas with their compass and their little things and trinkets and stars. Just kidding. Anyway, Brad, I'm curious, are there tools when a business owner or the employee who might be in charge, which I'm sure we're going to get into that later, is looking at knowing their numbers better? Are there a set of tools that people should really be focused in on?
Yeah, it's actually, there's in, I guess, 2018, the last couple of years with the advent of software as a service applications, the number of tools that exist are tremendous in terms of the amount that used to not exist or versus the amount that didn't exist 5 years ago. So, and those tools leverage AI, automation, et cetera, are cloud-based. So those tools are even more useful for people as long as they know how to use them, and actually takes a lot less time for them to, kind of leverage those systems. Just for us, when we use our clients, I think the number one thing you need to do just as a business owner at the end of the day is, understand what your inflows are, your revenues, and understand what your outflows are, your expenses, right? Tools that can easily help you manage those are, like cloud-based accounting systems, QuickBooks Online, which is what we use for all of our clients. There's Xero, which is XERO, which is very similar, but there's a ton of other ones that exist out there. When talking about them, the biggest thing is ensuring that you set them up properly for success. You leverage their technology of connecting to bank feeds, credit cards feeds, so the actual inflows, outflows that hit all those accounts actually are able to be categorized much quicker, and leverage the technology to kind of identify where they should go. At the end of the day, kind of within there, the one thing I would say for business owners that can help them just track the tools or using it is, number one is this, it kind of blows my mind with some of our clients that come our way. They don't like invoicing their customers, or some of them don't, and don't like following up on it because it's a tough conversation to have. In terms of understanding your numbers, the whole point you're in business is to make money. And the only way you can make money is by sending an invoice or a sales receipt or something to a customer, run their card, get a check from them, and ensure that it's getting deposited in your account and you're following up on those items. The accounting system isn't very good if you don't actually do that aspect, right? Like pushing bill payments and things like that, who gives a shit? But actually invoicing your customers and collecting on that money is a huge attribute of that. A couple other things to think about in terms of other software that can help you, understand your business or track, tools or things like that. Various spreadsheets you can use and leverage them if you'd like to. Expensify or expense reimbursement systems for credit cards, for, if you have employee cards, for your team members. If you are a service-based company like Accountfully is, like Impulse Creative is, a time tracking software so you can understand how much time you're spending on various tasks, because that time is your inventory as a service-based company, right? At the end of the day, I guess what I'm saying here is there is a ton of software as a service systems that exist that literally cost you 10, 20, 30 bucks a month, easy to understand, easy to set up, and easy to use. They share data between each other, so you can have somebody enter in If you're an inventory-based company that's selling on your website on Shopify, a customer, goes in and buys a t-shirt for $50, puts their credit card, gets paid. So the customer enters the information. It then syncs to your inventory management system. It then syncs to your QuickBooks, your financial accounting system. It increases revenue, and it goes ahead and deposits that money in the bank account, all automatically based upon if you set it up right and have the customer enter the data in. So just understanding that the systems that exist, which I'm sure you guys utilize in the marketing business, like you can set them up right and it create data. I mean, it creates so much more efficiencies, and then the data and the information that exists can help you with kind of, the question at hand in terms of understanding your business and understanding your numbers.
And Brad, I started out on purpose saying like, this is foreign to me. So I may ask some questions that the viewers or listeners or even yourself are like, how is this dude like like, how does he do this?
You should see the questions that Remington asked kind of month over month.
Oh, that's terrible. So here's my thing. A couple of things. One, you started to talk about people having an issue with invoicing, which inherently led my mind to, well, is there a way that you can invoice better so that it doesn't feel so awkward for some folks? That's one. And then maybe follow that up with, and this is because I'm more of a visual type person, come from like design background, even with marketing, love to design workflows in a very visual way. So when you're talking about paying attention to these numbers, and you mentioned things like QuickBooks Online and Xero, is there a better way, or is there even just a way to visualize the numbers? So it's better invoicing, visualizing numbers. What are your thoughts on those?
Yeah, better invoicing. Number one is if you are a service-based company and let's say that you have retainers or monthly fixed fee, set them up in your system to automatically create and send to your customers 10 days before the due date. So for example, at Accountfully, we have we bill our customers in about 4 different ways. Number one is monthly fixed fee, which essentially the invoice is due on the first of the month for the work that month. I set up the invoice to get sent out 10 days before, so on the 21st of the prior month, to the customer, so it gets in their bill pay process, and then they can pay the bill, and then it's automatically done, and it's paid for typically before the first of the month. So just put it in there. It takes 2 seconds to create a recurring invoice, send it to the customer. Boom, goes right into there. So that's number one. The other ways that, we make money, random hourly services or, periodic invoicing. Well, you just need to get a schedule set up in place. For example, we do the 15th and last day of the month. Well, on the 16th of the month, you run the reports, get the invoices out. Like, it's all about, there's certain variability in invoicing that's going to exist. It's more about getting on your schedule, getting your to-do list, whether you use Asana or whatever project management tool, whatever task tool, and just get down and do it, and don't procrastinate, because the longer you procrastinate, longer it takes to do it, and everything that comes into play there. So I would say kind of those two things. And then there's, let's say you track time in harvest. Like you can actually invoice directly out of customers in harvest for the hours or the time incurred. So you can really just have your team track time, review it, and then say create an invoice and send it to your customers, and then they get that invoice. So leveraging the tools and the functionality that exists that makes sense for how you run your operation of your business, and how you run the operation of your business with whether it's harvest, teamwork, Asana, whatever it is, like it doesn't matter. As long as you're leveraging it and using it and your team's bought into it and it gives you the information you need to, then just see if there's another functionality that can streamline that invoicing process that comes into play there. Everybody's all very keen about dashboards and visualization, and I'm sure you guys deal with this in the marketing world and, all that type of stuff, right? But like, for example, QuickBooks Online, they have a cool little dashboard once you log in that's got like, total invoices for the month, or you can change the date range, open invoices, past due. So you can see in red past due, click into it and be like, oh shit, these are past due or whatever. So you can kind of visualize and see where you're at. You can say month over month revenues versus expenses kind of at a high level. Their dashboard or functionality has some limitations to it. Reviewing the financial statements, typically it's done like in an Excel format, which isn't very fun to look at or understanding, or you don't see trends. So we actually leverage a system called Fathom. That's a reporting and analytical dashboard that's much more visual. You can see trends. You can compare key metrics and all that type of stuff. You can see, gross margins, utilization, gross profit for if you're in contribution margin, if you're a business, or excuse me, if you're a product-based business, et cetera. So, there's a million of those now. Everybody's building dashboards and visualizations because that's how people learn, and actually how people can make better decisions by seeing different colors and shapes and stuff. So those are kind of the couple things I would say around the invoicing and the visualization part.
So it's funny. One of the tools that you didn't mention, at least from a business point of view, is the actual accountant. I know for everyone that knows me, we use Accountfully. We use Brad and his company, and they do some incredible work. And we wanted to make sure that we brought him on the podcast. So when we're talking about like accountants specifically, one of the things we've been really impressed with Accountfully was the responsiveness and like the actual thought that was there. But can you kind of expand on what companies nowadays, like as a modern accountancy or modern accountant, should be doing or should be able to do for companies? Because I think that there are a lot that are very old school in their approach.
Definitely. When we created Accountfully, 5-6 years ago, like our point of when we created the model and the brand, the company was like the anti-accounting firm, the anti-Johnson & Johnson, PLC, suit and tie, bean counter, stereotype. Their revenues are derived from tax work and audits and basically completely non-value added activities to business owners. Who gives a shit what your tax is? Yeah, it's a requirement from the feds, but it doesn't help me do anything with business owner. Like, I need to understand what my break-even point is. I need to understand what various things that come into play. I need to create better efficiencies in my accounting system so I can get quicker and more reactive, end of the month closes so I can see my numbers, where I'm at on a month-over-month basis to make better decisions. From where it was 5-10 years ago, it's changed dramatically. And the couple reasons for that is due to the, just pure, like I keep going back to software as a service systems and, the advent of more like this, we're on using Zoom here, and, more businesses exist because it's easier to launch a business, because if you have a computer and internet connection, you can literally run a business. So more and more people are creating businesses, and a lot of them don't know anything about accounting, right? So there is various, modern accountants that exist now that their core service is more operational and managerial accounting, like Accountfully. Like our core service is being your fully outsourced accounting department, where we're helping you do the bookkeeping and accounting tasks, but then providing that strategic expertise to help you grow your business in whatever way you want to grow your business. You may want to say, hey, I want to stay here, and I have a lifestyle business. You may want to say, hey, I want to grow 10 people next 12 months and then increase revenues, double revenues or whatever. Well, we can kind of help map that way and help you provide a financial roadmap of what that makes sense. A couple things that come into play with that is the level of service that you're providing your clients and the responsiveness, because there is this whole advent of AI, and there's automated bookkeeping companies like Bench or things like that. Yeah, you can leverage them and whatever, but they're much more reactive, and there's always going to be this level of human interaction and decision making that's going to exist. The numbers that come up when a question's asked by our clients like Remington or other clients we have, and they're like, what about, hey, literally I just let go of an employee today, but I got this other guy, ready to hire tomorrow just because I met him the other night, but he's $30,000 more a year in salary. Can I afford this? Like, just a random question that comes up. It's like, well, hey, that's a timely, we need to help respond and have a quick call to you to talk about that, because I can't wait till next month or whatever. And then we need to look at the numbers and say, hey, well, where are you at? What's your current overhead? What's your current revenues? Like, what do you got coming in the pipeline? What other staffing do you have going on? Is there any other tweaks going on? Yeah, you can afford it. No, you can't afford it, or whatever. In summary, I think a lot of it is to be proactive as possible in terms of the financials that exist, to give you the most timely and accurate data to make the best decisions as possible. And then that accountant or bookkeeper, basically is there to help provide a good level of service that is sufficient for what you need to make better decisions at the end of the day. The goal is to kind of help you in that manner. So, a client your size, or a company of 15 people or 25 or 35 people, you don't really need a full-time CFO and accountant and spend $300,000 on that, department. You can pay somebody $5, $6, $7 a month for that and save a ton of costs. The same, business model, or the same, value that a marketing company provides. Like,
sure,
you can outsource pretty much everything these days until advent of the electronic and technology that exists. It helps out, but it still goes back to human interaction, relationships, providing the service, that's required in that aspect, because accounting isn't easy to understand.
This episode is brought to you by Impulse Creative Website and Marketing Audits. So there's a lot of times people think about a shiny new website, or they sign up for a marketing retainer with an agency without actually understanding where they are and where they should be going. So our audits demystify that process and set everyone up for success from the beginning. So if you're interested, check out impulsecreative.com and check out those audits.
Yeah, I love me some audits, people. You know what else I love? I love charting the course for business owners, employees who are trying to get to that place that we all know, and that is the beach, the mecca of success. You know, we're talking about accounting here, and it's funny because the question is, who needs to be the captain of the ship? And Brad, as I listened to you answer the question previous, is it really depends. And I think there's two directions that you might be able to go with this, maybe even more, is like, what does that, you started to talk about the CFO and the whole suite of people. What does that look like? Is that needed? And when is it needed? In some cases, 50, 100, 300 employees. And then what you were just explaining and kind of what you do, like, can you charter an accountant, right? Can you charter that ship, that boat to take you where you need to go on this side of it, depending if you're a smaller team or not? So really, who needs to be the captain of the ship when it comes to accounting, when it comes to knowing your numbers better and making smart decisions?
Obviously, when you're a 15-person company, that's really easy. It's like the business owner. When you get up and as you move forward and 30, 40, 50 people, then you may have departmental leads or things like that come into play that, you know, we may work more directly with. And then obviously you still report up to maybe a CFO or a CEO, but still, it still goes back to the owner of the business or the CEO of the business or wherever it's at. But I mean, in terms of a smaller company, say below 20 or 30 people, we work with business owners directly. Every client that we have, like our monthly meetings are with the business owner, or, you know, obviously one of the operating partners, if it's a partnership. I don't think we have any meetings where literally we'd be talking with some random employee that it just wouldn't make any sense, because number one, the information we're given is pretty sensitive. It could have, you know, employee data and salaries and, oh my God, the owner's making that much money. Holy shit. Well, you know, I need a pay raise. Like, so there, you know, the sensitivity exists. So at the end of the day, the business owner needs to be charting the course for that. You know, and literally if they're the ones that are going to either make the successful engagement or relationship with their accountant, if they're actually engaged and proactive and responsive. You know, some of our clients, we're not providing great service to them. You know why? Because it's just a lack of communication, a lack of, you know, responsiveness from and you know, you guys know how it is from, you know, a marketing company with your clients. Sometimes you don't get, you know, hey, I need your edits back in order for this or that. And they just don't engage. And you're just like, you feel, you email them, you're like, okay, what are we going to do? Like, you know, but you're like, it's not our fault that this isn't working as good as it can. Sure. Setting those expectations up front help. But if the business owner isn't involved and engaged, then it's kind of a waste of time at the end of the day, a lot of times. From a, you know, level of service in terms of what you need, the level of accountant, you know, different things like that. Like, once again, between 20 and 30 people, an outsourced firm like us that, you know, at an engagement with, you know, Impulse Creative, where we have 70% of the works, 75% of the works, like more bookkeeping, execution, staff, account level, right? It's just paying the bills, processing payroll, updating the books, yada, yada, yada. 15 to 20% is more of a senior accountant kind of controller level, where you're, you know, providing some higher level support, closing out the books monthly, running the reports, you know, handling some of the complex questions that come from a client. And another 5 or 10% is more of the CFO or manager levels, like where I kind of reside, where it's much more advisory, high level, strategic, as well as some more random complex situations that come into play along the way that, you know, the team can't handle. So as a client grows from $2 million in revenue to 5, the level of advisory service, you know, increases probably 2 or 3 times, because they need, you know, more budgets. They need departmental budgets. They need to understand it, because literally, you know, your fixed costs are $250,000 a month. So, you know, or whatever. So you have to like understand what's going on in terms of, do we have enough cash? Where is that? So there's a lot more of that type of work that comes into play. So just understanding what you need up front. And a lot of, you know, smaller clients or a lot of service-based companies, you know, like that are on retainers or have a couple clients that are, you know, 2-3 clients that are basically all they're billing a month. They don't need a high-level advisory service company. Like, it's like, hey, you just need to understand your numbers, get some execution and bookkeeping in place, close out the books, and understand it. There is a level of misconception. Sometimes people are like, I want to hire a CFO or do this. And it's like, I'll be like, you don't need that. Like, your business plug and play, it's pretty easy. And stuff like that. But as you kind of keep growing up to 10, 15, 20 people, there's a lot more complexity that comes into place.
When we're talking about, you know, the captain of the ship really needs to be like the C-suite or the managerial people that are trying to keep track of what's going on in the operations of the business. What about some symptoms that really start to show if you don't know your numbers? Do you mind sharing a little bit about that? Like what some struggles could be?
The number one thing, I guess, is probably that's not easily identifiable is pricing. From a product-based company, you're manufacturing the product, you're selling a product, you need to understand the cost of that product, as well as the cost to fulfill and get that product to the customer and any other direct expenses that exist.
Right.
So understanding that and then saying, how much money do I have left over to cover overhead from a service, so that's number one. For example, we have a lot of inventory-based clients sell on Amazon, let's say. So they sell on Amazon FBA, which is fulfilled by Amazon. So it's basically like drop on all your inventory out of their warehouse. And then somebody goes on Amazon, buys your product on Prime, gets it shipped or whatever. And Amazon, pays you twice a month, takes a bunch of fees out. If you're not accounting for the cost of the product and the cost of your fulfillment fees, any advertising you're doing on the site, anything like that, and you're not accounting for or looking at it properly, and you could leave literally like making nothing on Amazon, even though your revenues keep going up, but it's like, hey, you're losing money because you're not properly understanding that. Service side, if you're, a monthly retainer for a service-based company, $2,000, $3,000 a month retainer on marketing, well, at the end of the day, you need to understand how much time is being spent by your team, because otherwise you're not properly utilizing them. So if it's taking 60 hours to do the work, I doubt, a great designer like George would be billing at $50 an hour. I'm just throwing it out there. But if he isn't, or if that's not right, then you need to adjust the pricing or change the level of service. So I think that's the hardest one to really look at and understand. I mean, people go ahead and like, oh, this is how many expenses I brought in. This is the owner, the amount that I brought in. I made X number of dollars a month. The other thing I guess I would say is, looking at your cash flow, right? Yep. Once again, if your accounts receivable keeps increasing and you're not collecting on invoices and not doing that, that could really screw you, especially if you have a big client that literally just isn't paying you and they're maybe your largest client. Well, then you have to pay your employees, pay your rent still. So you need to make sure that that's kind of comes into play there. And then the other thing I would say is just some dramatic increases in kind of operating expenses, right? And month over month, most businesses are pretty steady, like a couple grand here and there, up and down and explainable. There's certain months you may have trade shows or things that are more, variable at times, but all of a sudden things just start creeping up and up and up. Your meals and entertainment goes up, office supplies goes up, and just random stuff. Well, by looking at that, at the end of the day, each line item by itself doesn't probably mean much, but when you add them up, the difference of like, wow, there's no control going on here, that could add up and really jeopardize you, especially a lot of that stuff really is non-value added items. For your business. It's really just keeping the lights on. And so I think that those are probably a couple good ones to kind of check out.
Brad, it's interesting because as I'm listening to you talk, I can almost feel my mind being like bent into like a different direction of thinking, which is really interesting to me because like typically at this point we would ask folks, so where should they be going? Where should these companies be navigating with accounting and knowing their numbers? And I'm like leaning into the fact of like, is there a magical, and of course not magical as in unicorns and like wands, but like is there a happy mix of like percentage rates or things that you can kind of map out when it comes to like, look, if your product it costs this to make, you want to get X percentage of over that, and if employees cost this much, then you need to calculate this number to figure that out. Like, is there maybe a web that can be woven here so that people will start to understand how these numbers connect with each other, and if you move one, right, it moves three other ones down the chain or to the left or to the right. What is that? I know that's a really weird question, but what does that look like? Is there something that we should be paying attention there as we're moving forward and paying attention to these numbers and how they work together?
Yeah, I would say a couple thoughts on that, because the first thought is having specific numbers that, hey, your company should be 25% expenses, operating expenses or overhead or facilities and rent and utilities as a percentage of revenue. Let's just say like that's a number that's been thrown out there, right? You have to be careful because we have clients that are low revenue companies that have raised $2 million in cash. So, but they have, 3 or 4 people, 5 people. They have, they've hired Accountfully. They have legal pay, legal expenses, etc. Leveraging that percentage of revenue, which is lower and it's going to grow, they're really in scale up mode, isn't a way to look at it, right? For that business, you basically need to leverage a kind of a 12, 24 month forecast. How many months on hand of cash do I have on hand and things like that, right? A steady state business that's much more recurring in nature and understanding, yeah, that's where you can easily much more see metrics and percentages in place. most service-based businesses, what you really want to kind of target is probably like a 20% EBITDA, so earnings before, interest and tax impact and things like that is kind of a good target to look at. So that's profit, but you still, as part of that profit, have to pay taxes on that profit. But that's kind of a metric to look at. Like there's typically on a pricing model or things like that, like, for service-based companies, like your pricing, and this is pretty complex, but your pricing should be your kind of your fully burdened labor cost, adjusted for expected utilization or expected billable hours. And then you need to increase it by your overhead per billable hour. And then you need to add a margin on top of that. Just understanding the different factors that come into play to understand where you want to go. So your margin, so let's say, for example, Impulse Creative has a highly value-added system or project or something that they implement for their clients that is not a commodity, so they can charge a high value dollar amount on it. Well, guess what? That 25% margin or whatever number I want to target doesn't apply, because what does the market say? The market says I can sell it for 10 grand. Well, if I can make it for $1,000, then sell it for 10 grand, right? So I wish a lot of people are like, give me the number, give me this, give me that. It's just so hard because everybody's business is different. For example, an example is like, again, a service-based company where some owners of the business are the highest producers from a client billable standpoint in that business. Some owners of the business are not client billable. They're sales or kind of just behind the scenes. It's hard if they're both making 150 grand a salary, because then you're like, wait, this one's actually producing, this one's not. And I'm not saying either one's wrong. Like, it's just, right, you need to understand of the whole point of what's going on. At the end of the day, like, I think, leveraging like an accountant, having numbers accurate and up to date and be able to review those, and then looking at where you're at currently and saying, hey, where do I want to go? And just benchmarking and baselining, and then doing some tweaks here and there can just help you understand percentages. I'm not going to throw out a percentage, because then all of a sudden it's like, oh, this percentage, yeah, but here's the disclaimers. If you're not doing this, if you're not doing this, if you're not doing this. Right. At the end of the day, you want to be profitable. So you have to kind of vary it by what's going on with your business.
So what I'm hearing you say there is know what your bottom line number is, based on like what is your break even, because that can give you perspective to charge extra. Like if you know your cost on that commodity is $1,000, but the fair market value of that is $10,000, then know that you can't give that away for less than $1,000. Like giving it away actually costs you $1,000 in that case. So I think that to kind of bring that back to what you were saying, George, is just making sure that you understand what that cost is, and then the profits are easy to decide based on what you sell it for.
One other thing is understand that cost, yes, revenues coming in are great, right? Money, it's coming in. But you have to understand, if it's not profitable money, then it becomes an opportunity cost, right? So if you're spending $1,000 on this product and all of a sudden, but you're not making money on that specific client or project or whatever, well, that $1,000 of labor or whatever it is could be used somewhere else, right? Same thing on, selling a product, selling a t-shirt. Well, money's coming in, yeah, but if you're not making any money on it, that $1,000 in cash you use to buy those t-shirts can be used somewhere else in the business or for a more profitable product. So understanding it's not always good money, but understanding, where at least your minimum is to break even and say, yeah, that's okay, I'm fine, or I need to tweak, I need to raise prices, or I just need to get rid of it, really helps out.
That's awesome. So as we go into people that are having the aha moments right now going, holy crap, I don't know what my adjusted billable hour should be, or like what my cost is per billable hour. What are 2 to 3 things they can execute today around kind of knowing their numbers? And what are some things that they should look for to start this journey towards understanding things a little bit more?
Kind of the first thing is really reassess yourself in terms of, do I need to hire or begin a relationship with an accountant or somebody like Accountfully to help me out with this process is number one. A lot of people are business savvy and can do it and figure it out. Some people aren't. Some people are business savvy, but they have zero time to do it. So understanding like you're more important selling or creating websites than doing accounting. So number one, I think really just look at your current situation and be honest about yourself, and then start, finding somebody. And then number two is part of that, the person you want to look for. Don't nickel and dime them. Understand the whole level of service that's provided. They're providing some sort of value that's coming into play, and it's going to help your business run better. I think that kind of those are the first couple of things. The next one is, depending upon your level of business or how big your business is just make sure that you're accounting for your business expenses properly, making sure you know where they're at. Leveraging a system like QuickBooks is great. Some people just literally like, hey, I got all in Excel. Well, guess what? That works for you. Awesome. Cool. It's not scalable, but at a minimum, if you're handling that, awesome. Kind of the other thing to kind of know your numbers, obviously, would be understanding your expenses, understanding your break-even point, of where you're at in that. Once again, leveraging a QuickBooks, even exporting go to Amex, go to Bank of America, whatever your website or whatever credit card you use, export to Excel, and at a minimum, you can categorize them. Like, just understand what your break-even is and understand what you need. Some business owners that we work with, are husband-wife couples that have kids, and they have obviously, and they rely 100% on the business. Well, then you need to understand, what is my break even to make this all work? And then you need to factor in and backload that way, right? And understand that, hey, I may not be able to hire anybody for a while because I got to make this thing work. Otherwise, like, this isn't working for us. So I think pure identification and self-assessment is the first couple of tools. And then from there, then you can begin, if you want to, look at tools, great. From a service-based company, I think time tracking is super easy to implement. Like, that doesn't take rocket science. Implementing an accounting system is much more intense, I think, than that in terms of doing it right. But I don't want you to waste your time if you're not good at it. Like, be like, hey, Accountfully needs a new website. Okay, well, I'm going to go research WordPress and do it myself. That just doesn't make any sense. Hire somebody good. They can do it much quicker and much better, for you. I think those are the kind of two things. Oh, the last thing I'll say is, anything you do and you look at, do two things. Do it like weekly. Right? Like, every Friday, put in your calendar from 2 to 4, I'm doing an accounting related task or whatever it is. Because otherwise, when you get behind, the project becomes much bigger and you quit doing it. And number 2 is, whatever reports you're doing, whatever you're doing weekly or whatever, review the data and don't just, and then try to make decisions based upon that data. There's a lot of people that literally, we do the work for them and they don't review anything. And it's just like, well, that was a waste of time, So Sure. What you're doing is look at it and try to learn from it. And try, because as you guys know, if you guys do an audit on a website, look at it. What the hell's the report good for? It just doesn't matter, right? So try to take some pointers from that.
Yeah, I like those weekly things. We got a weekly thing too. It's our weekly show notes and our deep dive newsletter. You need to make sure you go over to wayfindinggrowth.com. Go ahead and fill out that little form. We don't ask a lot of you, and we give you a ton of value. We're going to send those show notes so you can get links to all the tools. You can get what is deep in the minds of Remington and myself, which might be scary sometimes, but usually it's pretty useful for your business. And Remington, what is our next section?
So, George, I think this is your favorite section. Do you know what that section is? It's the Captain Killing It.
There you go.
I didn't do it as well as George does, but the Captain Killing It.
There you go.
George has the voice for that.
Oh, he really does. Like, Captain Killing It.
Well, see, here's the thing. And
come on,
listeners, viewers, you can just hang with us for a second, because it comes from down here, right? It's and you got to bring in the energy, like, and then it's like, and so it's time for Captain Killing It. Like, you really got to get into like the body, you all of you who are listening have no clue what people are visualizing.
We're like dancing on screen. Yeah.
But it is time for Captain Killing.
So let's talk about like the one person that is navigating this week's dangerous seas of social media or in their business, and they are absolutely killing it.
From my perspective, if you guys want me to answer this question, which is interesting because obviously I would say the Wayfinding podcast is killing it, as well as Impulse Creative. But, it's hard it's interesting when you look at our like specific clients and all of the ones that we have. It is funny that what I will say is that it's tough to be a small business owner, and it's tough to grow a business no matter what it is. And that's just pure execution, and not even withstanding the requirements from regulations from IRS, from the government, from a local business license and all that type of stuff. So at the end of the day, I think, from a killing it standpoint, what I would say is that anybody that literally goes into business and wants to figure it out and tries to figure it out and tries their hardest to figure it out and leverages experts and resources to try to figure it out and gives it their all. And if they don't, then whatever, then they move on, specifically with, some of my clients, or a couple clients of ours that are really crushing it, is Head High Media. It's a video production company up in Charleston. They've actually been a client of ours for like 5 years. And we actually used to sublease our first office there from them. And Tim McManus, the owner of that, he does fantastic work. Mented Cosmetics, it's like a lipstick company. They sell lipstick based out of New York City. They're like, when we originally got that, we client about a half year, like they're doing great and growing. We have a ton of other clients that's raising a ton of money and growing that aspect. I mean, it's cool to see all of the clients and the growth that, or what they want to do, and if they can handle it, and their different expectations, experiences, from whether it's cash flow issues or just sales issues, or, overhead issues, or they had partner issues where they bought out, had to buy out a partner, and it took a ton of money out because that partner, sucked or did whatever that they had to. One other client locally in Charleston we brought on recently is Nectar Sunglasses. They're doing fantastic, and then we're excited to have them on board. So, those are a couple of them that we have. And it's super cool to kind of be engaged with clients, the small business clients, because one, I can understand and empathize with them because I'm a business owner myself. So a lot of the stuff that they're going through, one, I learn from them. So Accountfully makes less mistakes. They make mistakes, less mistakes, because we're like learning from all our business owners. I think I would say that, without kind of getting too in detail on some stuff, but it's hard. And, just giving your all and rolling forward and understanding that you can make mistakes along the way. But hey, a lot of times you can correct them. So
definitely. And here's the thing. We will link some of those Captain Killing It folks in the show notes. So if you want to check out their websites or check out, maybe you need some new lipstick, people. I don't know how you roll, but
or sunglasses.
Or sunglasses. Yeah, sunglasses.
I don't know if they have any orange lipstick though.
Oh yeah, I don't need orange lipstick.
It's over, guys.
Here's the thing. Here's the thing. Here's the thing though, too. I do want to throw this out here because this is the first and maybe the only podcast that we'll do that we have mentioned the dirty words that are IRS, right? And I just want to say that maybe they're this week's Captain Killing It because, if they weren't around, a lot more businesses could be profitable. I'm just going to throw that out there. Speaking of which, since we're talking about the IRS and the Bermuda Triangle, Illuminati confirmed, let's go ahead and jump into those. And Brad, here's the thing. What makes this impossible or seem, because we all know it's not impossible. Like nothing is impossible. You just got to work really hard and keep at it. But what makes this seem impossible to most companies where they're just like, I don't know how to pay attention to my numbers. I don't know how to make smart decisions based on these things. I don't understand this web that is tangled through this accounting world that people live in.
Short answer to this, I think it kind of summarizes a lot of what we chatted about is one, finding good advisors to help you out. Number two, reviewing data, reviewing reports, kind of consistently try to learn from them, tweak them a little bit if it doesn't make sense to you. Sometimes best practices in terms of, chart of accounts is this or that, but maybe for you, it's a little bit different the way your mind works. At a minimum, if you're getting it out of it and you're learning from it, then who cares, right? Like it doesn't matter what I say. And then the last thing is periodic, do things consistently every Friday, every Tuesdays and Fridays, whatever it is, it helps out. I think that's kind of a big takeaway from all kind of podcasts of just, if you want to be good at something, you want to learn something, you need to do it constantly. Like read every day, review something every day or whatever it is, listen to a great podcast every day, learn something. So that kind of applies to accounting. And I understand it's hard because it's sensitive data, it's money. We have a huge emotional issue with that from just a lot of, money we require money to live basically. And a lot of people don't want to talk about it, but just kind of letting go and just understanding it and asking for help when needed. And then just taking ownership that, hey, you, the business owner, it's on you to figure it out. Like nobody cares. Everybody's got their shit going on in their own life and they're not going to worry about you. So you need to be proactive in terms of that.
So when do people start getting kind of hung up or start to fail when trying to know their numbers? Like what are some specific things that you've seen where people maybe attempt to start to know their numbers, but they kind of, it just flops?
I would say when it's outside of their level of competence, and I'm not trying to be within accounting, right? Like just don't try too hard if you can't do it. You don't need to get an advisor or accountant on deck monthly for $1,000 a month. You can say, hey, can you come here and just do a gut check, a little discovery, a couple hours to make sure I'm doing things right? Is it okay? What's going on? Another thing is if you're leveraging a system like QuickBooks or Xero, they have code built in that adds things up right, that balances right. Well, if you're doing stuff in an Excel spreadsheet and you literally mess up a formula or something, it can throw everything off, and then you could be looking at bad data. So just understand there's a level of kind of control that comes into play there. See trends, try to look at some trends, see what's going on. Make sure your pricing, your once again goes up to pricing. Make sure your pricing is right and accurate, and then just get an extra set of eyes if needed.
I love how gingerly you are trying to put the fact of like, Well, if you're not that smart when it comes to, because I was like thinking, well, I'm not trying to design any nuclear missiles tomorrow. I'm not going to go do brain surgery on somebody's wife. So if you know that accounting is not your thing, then tap out, focus on your strengths, let somebody else handle your weaknesses. That might be the bonus tip of this episode, just saying.
Well, yeah. Let's say you're like a 3-person company, right? And you're just literally out designing brands and websites. And what you're looking at needed, we're going to be doing all your books, closing out your numbers, and we're going to have quarterly financial meetings, let's say. That could be like $500, $750 a month. If you didn't waste 5 hours a month doing that and you hired a professional to do that, what's your billable rate, or what can you go out to get another project? People don't understand their opportunity cost that comes into play a lot of times because they just look at outflows because it is a lot going on with running a business. But understanding that if I didn't do this 5 hours, number one, I could probably make better decisions, which probably would save me money anyways. But number two, understanding that, you could probably go up and make that money up just like that anyways, and doing something that can actually grow the top line of your business versus, help the underlying expenses and stuff.
Brad, this has been super interesting, and I have learned a ton. By the way, you use combinations of words that I have never heard in my lifetime. I'm just going to throw that out there. And here's the thing. If people like me, I can say this in this one. If people like me have more questions, if they realize I shouldn't be spending that 5 or 10 hours and jacking up my Excel spreadsheet, because I don't even know if that C minus plus M2 is doing what it's supposed to do in my spreadsheet. Don't try that, people. That may explode your Excel spreadsheet. I don't even know what those numbers do. But if people want to reach out to you, if they have questions, where is it that you want to send them, Brad?
I guess come to our website, accountfully.com, ACCOUNTFULLY.com, like fully accounting, accountfully.com. That's a good place to go. We have a getting started form on our site that you can fill out that comes into, our intake or emails, and then we'll follow up and set up a call, or you can email me directly at brad@accountfully.com. We have a lot of great blogs and literature and content on our site around inventory, around some digital agency stuff and things like that, that may be some good kind of things to look at. We also have great social media, cool little Instagram following for an accountant or accounting firm, I think. And we'll keep kind of try to grow the old Twitter, Facebook, LinkedIn kind of space. So all those, it's, Instagram.com/accountfully, Facebook.com/accountfully. I'm sure you can find them all.
I'm sure they can. Second bonus tip for this episode, an accountant led with Instagram. Just throwing that out there. Yeah. Hey, guests, I want to thank you for watching this show. I want to thank you, Brad, for being on the show. Listeners, you know where to find all of our socials. Again, your engagement, your listenership, we very, very much value it. Remember, you can reach out to us, WG@Impulse Creative, if you have topics that you want us to cover. Look, we're here to try to navigate your business to a level of success. Remember, if you are listening to this on your favorite podcast app, head over to iTunes. And I'm not saying that iTunes isn't your favorite podcast app, but head over to iTunes, leave a rating and review, 5 stars, some nice words would be nice. If you're watching this on YouTube, then go ahead and hit that subscribe button, hit the bell for instant notifications. Ding. And until next time, folks, may you leave the dock of mediocrity and set sail into the sunset of your success.